Welcome to FX Street. If you like what we're talking about, you like the content we're producing, you want to be updated to it on a regular basis, head on over to YouTube to our channel and hit the subscribe button. You can also follow me individually on Twitter at JustAnalysis1. Taking a look here at the Sandbox or Sand, part of that metaverse gaming token class of cryptocurrencies that have had such a substantial rise over the last couple months, it seems. Um, Mixed signals here, especially post. Post on Saturday, it was a pretty, pretty wild whipsaw in price. You look at where it opened on Saturday, it moved down all the way to 189. I mean, it had a sorry, not 189, to that $4 level. 31.4% loss, and then it retraced that entire move actually to eke out a little bit of a close higher on the day. One of the only cryptos to do that. But then you saw a Sunday sell off, and you just see it kind of retracing down lower, and that's just kind of been the story the for Sand. From a point and figure perspective, there's a very definite looking bearish continuation pattern on the 5 cent 3 box reversal chart, point and figure chart. I'm looking at a short idea here. So hypothetical entry would be a sell stop order at 535 with a stop loss at 555, and the target on that would be down at 430. That's a 5.25 to 1 reward for that the risk. On the long side of the market, you need a return above the Kijun Sen and the Tenkan Sen on the daily chart. Now, the fact that it's above the cloud is still very bullish. That is still pointing to Sand being very bullish. But every day that we move forward here without really pushing higher, we're getting closer and closer to conditions where the Chiku span is no longer an open space. Open space means that if I look forward over the next 5 to 10 candlesticks, will it intercept the bodies of any candlesticks at its current level? It won't. But by the weekend, that may change. And then it's no longer an open space, and that means that consolidation is likely continue to be the norm. Volatility may increase, and directionless trading may occur. So, in order to, over the next couple days, for me to look at going back long on Sand, I need to see a daily close that is above that Kijun Sen and Tenkan Sen, and roughly around that 5.75 level, exactly somewhere around there, maybe slightly above it, but $5.75 a daily close at or around that level, slightly above it. I mean, would be ideal. The stop would be below the current daily low at 509, and the target is not near at the all-time high. It's slightly below it at $8.20 because you'd likely see some selling pressure up there. The daily chart does show that there should be some supportive action here to trade higher. Sand came down to the level 50s and in the RSI, which is the first oversold level in the bull market. And the composite index made a new all-time low. And you have this very, very definite hidden bullish divergence now. When you look at the trough in the composite index from November 11th to what we had back on November 7th, you have definite higher lows, higher closes on the price chart, but you have lower lows and lower closes on the composite index. Same with the RSI. So there's hidden bullish divergence in there. And that's on the long side of the market. Again, entry at 575, stop at 509, target up at $8.20. And on the short side, basing the entry on a break of a double bottom. A quick note on the short side why this is such a strong signal is because it does three things simultaneously. Confirms a breakdown below a double bottom. It converts the chart back into a bear market, and it confirms a bearish fake out pattern or bullish fake out pattern, which is a bearish reversal setup. So there's a lot of stuff happening on this chart that should be observed and watched and looked out for. We'll keep an eye on it and update it as needed. Thank you for watching. Please don't forget to like, comment, and subscribe.